What is going on, guys? We have a lot to discuss as far as the stock market and overall performance of the stocks that are in the market and what they're doing today. We have some interesting two terrific growth stocks that we're going to be looking at the later part of this video too, that I might potentially be buying some shares of sooner rather than later. So make sure you stick around to the end of this video. We're going to get into what's happening with the markets and what kind of plays I've been making over the last couple of hours. But before we do that, I want to recommend you guys join the first link down in the description below and go to our Discord, guys. This is how you get access to our buy and sell alerts that we post on a daily basis. All you have to do is go down, hit that first link down in the description below. Go to join us, go to one of these links in the join us tab, and you guys can get access through these different pricing tiers, whatever works for your budget. We have a variety of options for you guys to choose from. Now, let's get into some of what the market is doing as of today. We can see right now that stocks are slipping as rates rise to their highest level in over 3 months. So what are the rates that are rising? Well, we know that interest rates have been a very, very hot button issue. And as you can see down here, investors continue to worry how the economy and equities will hold up as the Federal Reserve hikes rates to tame stubbornly high inflation. In a Friday speech, Federal Reserve Governor Michelle Bowman said that there's a long way to go before the central bank reaches its target of at least only 2% inflation, meaning that the rates are only going to continue to rise until then. And the fact that they're posturing as there is a quote unquote long way to go, before we can actually get to this 2% inflation target that the overall central bank is looking to hit. That obviously speaks volumes in the overall market, right? When we see that kind of news come out, we can typically see stocks not respond very positively or very bullishly. We see a little bit more bearish movement, and that's no stranger when we look at the overall charts, as you can see here, right? We're overall big gap down in market open here into February 17th, which is obviously today, and as you can see, we have been kind of moving sideways, only going further down. We tried to make a little bit of a recovery there with some buyers on that dip, and now we're starting to get kind of crushed with some people taking profits and some other movement involved in there. Now we're just kind of stagnating into this kind of pattern here, it seems like, intraday. But again, it is still kind of early in the morning in this trading session, so we'll have to see where that ends up going. Interesting little story here that I wanted to touch on. DraftKings had a very interesting earnings play when their earnings were reported. So they were surging up 15% today in intraday trading on their earnings report, which basically went pretty well. So as you can see here, we can take a look. In his view, the trend indicates a positive implication of the fourth quarter print aren't fully reflected in the stock, as the fundamental levers for further beats are in place for 23-24 plus. Additionally, DraftKings is now in a stronger competitive position with the OSB, or online sports betting, market rationalization, and line of sight to positive cash flow and room to be more aggressive with growth investments. So overall, this company is very healthy and only seems to be continuing to grow further and further. That's what this earnings dictates, and that's why so many people, it seems, are buying at the stock today and why the stock is doing so well. And this is just a really good example, guys, of why when you look at these kind of companies that have very good numbers on paper, right? They're doing big revenue, big cash flow, right? They don't have a lot of debt to assets. They have a very strong balance sheet. You can see potential like arbitrage plays like this, especially during sports eras and sports games, especially during those kind of seasons, right? Where betting is going to just be more popular. This was a pretty easy arbitrage play that anybody could have seen coming. And again, I just want to kind of touch on this and show how this is a potential thing that you obviously need to be looking out for in the overall markets. Let's get into those growth stocks. But before we do, guys, make sure you guys pick up a couple of free stocks with Webull. Webull is the brokerage that I use for these charts that I have on screen right now. We also use it to invest in a variety of different stocks and obviously trade options on a daily basis. And of course, too, it's an amazing brokerage app where you obviously can support the channel by using our affiliate link, plus get a bunch of free money with some free stocks down there when you use that link as well. I believe it's up to $36,000 in free stocks now that you have the potential to get. So why not try your hand, get some free money, and get an amazing brokerage app all in the same time. Now, let's get into these two growth stocks to buy. This is the Motley Fool. I know everybody has their opinions about the Motley Fool, but I do think that these stocks are actually quite interesting and have some potential kind of disruption to be had in the industries that they're in. So let's take a read. So if you aren't a medical professional in the US, there's a good chance you haven't heard of Doximity or its social media platforms, with 80% of the nation's physicians already on its membership roster through pharmaceutical companies that want to get their messages in front of the right people know it well. In Doximity's fiscal third quarter, which ended December 31st, 2022, total revenue rose over 21% year over year to $133.6 million. It's relatively slow compared to the company's recent past, but it's downright amazing. Right now, for a social media platform that relies heavily on digitally advertising, over the same period, Facebook's parent company Meta Platforms reported fourth quarter sales that declined 4% year over year, while Alphabet reported fourth quarter sales also declining about 3.6% over year. And again, Doximity has a large patient pool, 375,000 unique active clinicians using the company's telehealth tools in its fiscal third year. So this is kind of a rising star in the overall healthcare community, especially in the telehealth industry that has become so popular post-COVID and post-2020. And again, it seems like they're positioning themselves to do very well with these types of numbers and potentially, obviously, make a little bit of a gain there in overall stock price as well. I might be buying a few shares soon. We also have InMode. InMode is interesting because this is a growth stock once again, and it also in the medical industry. A little bit more niche though. This is a niche medical device maker. Israel headquartered company markets a wide variety of devices used to perform non-invasive cosmetic procedures. InMode's biggest growth drivers at the moment is a minimally invasive alternative to liposuction called BodyTite. With a narrow probe inserted under the skin surface, providers can melt at tissue to shape and contour the skin above. As the only device with patent-protected radiofrequency technology, BodyTite could remain in the leading liposuction alternative for the foreseeable future, which is a big deal. A lot of people these days are getting cosmetic surgeries. It's only becoming a more and more popular trend to take part in and obviously to get done. And of course, as this continues to grow, we're only likely going to see more revenue continue to grow in this way as well. We also saw InMode rose over 21% year over year to about 133.6 million in overall quarter revenue, and as impressive as it sounds, is likely just a fraction of the company's addressable market. According to Grandview Research, the global market for non-invasive aesthetic procedures reaches over $61 billion in just 2022 alone. So again, this positions itself as a very potentially good arbitrage play as well as obviously a growth stock in general. Might be buying some shares of this really soon. Let me know in the comments below what you guys think about these two stocks, Doximity and InMode. Would love to know your overall thoughts. And of course, hit that subscribe button if you haven't already, guys. But other than that, that's all I have for you guys today. I'm Kyle with Finance Bro. Take it easy.